Welcome back. In fact, you've got sugar stocks, and those stocks are buzzing in trade. And Avi has been pointing this out to me since the last couple of days. So let me quickly go across. The global sugar prices, at least, have surged, and this is there is mounting supply concerns. Brazil faces harvest disruptions. Thailand cuts its production forecast. In India, inventories are tight, and improving festive demand have pushed domestic sugar prices up, and they're up nearly 20% for the month of August alone. Are we here with all of the trends?
As Harsh rightly mentioned, the sugar sector has been buzzing, and we can see that the stocks have rallied in the range of 10 to 15% in the week gone by. That is on account of global supply crisis and constraints and the growing domestic demand. Talking about the US, raw sugar prices have crossed the key mark of 15 cents per pound and have now reached 16 cents per pound. Talking about Brazil, which is the world's largest sugar producer, has been facing adverse weather due to which their harvest season for sugar has been delaying. They've also suspended their bi-weekly production and harvest data for sugar, giving very limited visibility on the supply side of sugar. Thailand, in fact, has cut its production estimate to 9.5 metric tons, and the global sugar deficit is now being estimated in the range up to 3.3 metric tons. Talking about the Indian domestic market, we can see that the growing demand for sugarcane, along with higher ethanol production, also using molasses as a part of it, is now leading to growth in the sugar demand. Sugar exports, however, remained restricted until the 30th of September. And even after the restrictions are lifted for exports, we can see very limited exports being done from India with respect to sugar, because we have a lot of domestic demand to meet too. The domestic sugar prices have skyrocketed by almost 20% in the month of August alone. The inventory produced at around 37 rupees per kg now sits at around 47 to 55 rupees per kg, making some huge mega inventory gains for the sugar players in play. We can see that the inventory gain will help companies with better EBITDA margins, strong cash inflows, and of course an earnings upgrade that could come. Talking about the embedded total gains would range in the almost in the range of 500 to 800 crore rupees, and the Q2 to see inventory gains in the range of 100 to almost 250 crore rupees. The top beneficiaries would be Balrampur Chini, Triveni, and Dalmia. There are also reports that suggest the government is planning to cut absolutely the 100% sugar import that is applicable as of now, to better make sure the availability of sugarcane in India and to support the growing demand in the domestic market. So all in all, we've seen that the sugar stocks have skyrocketed because of global supply constraints and the growing domestic demand, as it is also used in ethanol production.
Okay. Thank you so much for that, Avi. That contextualizes everything that's happening with regard to sugar, and plenty of strong moves today from the sugar pack. Let me bring on board Shrikant Chauhan of Kotak Securities. Shrikant, first let me quiz you on sugar before I get to the index. What's the view here? Opportunity, you reckon, to probably pull a trade?
So I think very first, if we go through with the this particular commodity, sugar, in terms of dollar, we can very clearly see that it was somewhere around $13.5. From there all the way now it is at 18, and around 18, this particular commodity has spent a lot of time since 2021 to almost February 2025. It was holding about the same, but after breaking that, we saw deep decline up to $12.5. Now again it is rebounding to the same, but this time the overall activity is clearly indicating us that it is going to sustain above the mark of 18, and if that is true, then we can even see the levels of maybe 22 on the commodity, which is roughly, we can say, 20% higher from current level. So broadly, I am of the view that if the commodity is indicating such type of activity, then we can expect similar sort of activity in sugar stocks. And in that specifically, we like Balrampur Chini. There we feel that it is going to spend some time close to these levels, around 650, 655, because it is very close to its previous high. But after sustaining or consolidating around these levels, the stock can cross its previous high of 690, 700, and above that the possibility of hitting 740, 745. So based on technicals, Balrampur Chini looks quite strong candidate to buy, but with a medium term view or with a positional view, not with a very short term view. Also, if we consider Bajaj Hindusthan, there also we saw a quick recovery from lower levels, and best part is that today the stock has crossed its weekly and monthly highest level at 21. So based on this particular formation, Bajaj Hindusthan can also move towards the levels of 25 or 26. So in both the stocks, we can see some 15 to 20% sort of appreciation from current levels. And I think this particular commodity can do well.
Okay, so bullish sugar, clearly. Kunal, your favorites from within the sugar pack, what is it that you're liking?
Yeah, I think Balrampur Chini, of course, is the strongest one out of the pack. That's a stock which I've been tracking, I think on a consistent basis over the last few weeks. From a base around 500 to 550, just about a month and a half or back towards 600 plus mark. I think recently, if I'm not wrong, the stock made a high of around 680 thereabouts for Balrampur Chini. So it's been a stock which has been into a fine fettle, looks very attractive. There are other names which are starting to show signs of a recovery. I was looking at the charts for Dalmia Sugar, Andhra Sugar, even Praj Industries. I think a stock which has been struggling around the 300 mark or sub 300 levels. That stock has also made a comeback towards 320, 325 plus mark. So there are many of the stocks in the sugar pack looks attractive. I think this could be a good cyclical or even a seasonal trade, even if it lasts for another couple of months.
Okay, I need to slip into a very short break, but on the other side, we're going to quiz Srikanth on where he's seeing the Nifty. He's seeing some moves on the Nifty Bank which look interesting. We'll quiz him on the Nifty Bank as well and his top picks on the other side. Stay tuned for that. Welcome back, and we of course have with us Srikanth Chauhan as well as Kunal Bothra. Srikanth, if I can come to you first off, and I'll stick with you in this segment. So let me first take your view with regard to the Nifty index itself. What's the Nifty index call that you have? Srikanth, I believe you're on mute.
Sorry.
No worries. Please go ahead.
So Nifty is it is down, but it is very close to its important support levels. 24,000 acted as a major support level in the past. And when there was recovery, it acted as major resistance. So I think this particular level we can consider as a polarity level for the market. But at the same time, today's highest level, that is 24,200, is also going to act as major resistance. If we consider the overall activity of the market, then it is like, I'm to say the Nifty is falling gradually. It is much slower than the expectations. And whenever we see such type of gradual sort of sell-off in the market, especially when the market is already beaten down, we see a very strong bounce back if something comes positive. Right now, all the positives are missing. And maybe because of that, every day we are seeing market is falling to the newer level. So close to this 24,000 levels, the market is having support. But if there is a very short-term view, then till the market is not crossing 24,200, we can expect weakness in this market, and some more downward activity is not ruled out. For Bank Nifty, there also we saw gradual decline, but today it is holding above the mark of 57,000, and now it is trading comfortably above the mark of 57,200. But here also we need Bank Nifty to sustain above the mark of 57,500. So I think 57,500 for Bank Nifty, 24,200 for Nifty. I think these are the levels. Till the market is not crossing these levels, we can expect maybe downward trend or some more weakness in the market.
The banks, Srikanth, they've been lackluster to say the very least. Private sector as well as PSU is now entering that phase of consolidation. What's the view there?
So for PSUs, we are expecting some bounce back, and most of these stocks are very close to their important support levels after hitting important resistance level in the near term. So at these levels, stocks like PNB or maybe Bank of Baroda, I think these are the stocks which where we can expect a quick rebound in the near future. But large cap banks, especially Axis Bank, HDFC Bank, they are available at their important support levels. And yes, no doubt that they have underperformed heavily. But at these levels, we are expecting rebound in the market. If there is a rebound in the market, then these stocks can do well. So at these levels, we are taking some contra bets of buying Axis Bank as well as HDFC Bank from the large cap private bank sector segment.
Got it. And your top picks, Srikanth, how would you play the market at this point of time?
So if we go through with the like broader market, then a number of stocks have crossed their important resistance level and form higher top, higher bottom series in last 10-12 days. In that specifically, we like Torrent Pharma, which is currently around 5,020, 5,030 sort of levels. Recently, the stock has tested its important support levels and again formed a higher bottom. So from here, the stock can move towards the levels of 51.30, 51.50 in the near term. We can keep a stop loss around 4980 for creating long positions on Torrent Pharma. The other stock on which we are bullish is Hindustan Aeronautics. There also we have a bullish view, and there also we are expecting stock to move towards 5250, 5300. Here we can keep a stop loss around 4980 for creating long positions. So I think these are the two stocks where we can keep a close watch and we should look for taking some long bets.
Okay. I'm going to try to pull out a couple of buzzers as well. And you've got GSK Pharma, Srikanth. 7.5% move yesterday. We've seen follow-up buying action today, 5% higher in trade today as well. What next on this one?
Yeah, absolutely. I think this all multinational pharma companies, there we are seeing good amount of buying attraction. And I think, see, like for Glaxo, it is very close to its immediate resistance level because it was around 2,600 levels. It has spent a lot of time close to 2,600. From there all the way now it is at 3,020, 3,030. So we may see some profit taking or maybe sideways sort of activity close to this 3,020, 3,050 sort of levels. So at this levels, it is better to stay away from taking any long bet on Glaxo. But Pfizer, there we are expecting further more activity. Here the stock has formed a fresh higher bottom close to 4,700 and now it is at 49. Based on its technical formation, the stock can move towards the levels of 5,200. So around 4,900, it's a buy with a stop loss close to 4,800.
Okay. All right. Srikanth, last off, I want to also take your view with regard to some of the other names which have been buzzers in recent month or so of kind of a time period. Keynes Tech and Kalyan Jewellers. What's the view on these two?
Yeah, so both these stocks recovered beyond the expectations because if we consider their overall technical pattern of last, let's say 3 months, then we saw deep decline in Keynes as well as in Kalyan Jewellers. But in the recent times, they recovered smartly from their lows. And in that specifically, Keynes, I am of the view that still the stock has further more legs to move higher. And currently it is around 3,800, but the stock can move towards the levels of maybe 4,050, 4,100 sort of levels. So there we can expect further more upside. But for Kalyan Jewellers, there I'm a little bit cautious because the stock has formed lower high sort of formation. Also, the stock is diverging negatively on daily basis. So till the stock is not crossing its previous high, immediate highest level, we can expect downward trend in the stock. So it is like mandatory for the stock to cross the level of 650. Till then, we can expect weakness.
Okay. All right. Srikanth, stay with us. I'm going to slip into a very short break, come back. Plenty to speak about. We'll get you some volume buzzers on the other side of the break. We'll also get you a very fascinating stock chart that we've been building up since the morning. ICICI versus HDFC Bank. And we'll take Srikanth as well as Kunal's view on which one they think is going to outperform 3 months, 6 months and 12 months. So start preparing, Srikanth and Kunal. ICICI or HDFC on the other side of this break. Stay with us.